Ladies and gentlemen, Greg Mikulowski from ForexLive.com. Today's date is February 28, 2023. This is the Morning Forex Technical Report. Let's get started. I'm excited to get started because the euro versus US dollar is testing the 200-hour moving average. That's a green line in this chart. Recall from last week, the price moved up to that 200-hour moving average and found willing sellers pushing the price all the way down to a low of 105.32 before seeing a rebound and trading yesterday and into today. We're seeing a rotation back to the upside. We did get above the 100-hour moving average. That's a blue line in this chart yesterday and closed above that level. The buyers were trying to take control in the Asian session. We did move back below that 100-hour moving average, but it wasn't until the CPI data out of Europe came out a bit stronger than expected, and we saw the euro versus US dollar move to the upside in trading in the European session. And now we're seeing some follow-through buying into the early New York session, which is taking the price to and a little bit through the 200-hour moving average as we speak. If the price is going to go higher, we need to get and stay above that 200-hour moving average and then get above the 38.2% retracement. That would be a nice confirmation. That 32% retracement is a move down from this high right here to this low right here. Get above it and stay above it, and we have traders looking toward this swing area up through here, where we had again a number of different swing lows and swing highs through this area right through here, going back in time. And the last time the price traded above that level was back here on February 21st. And then we held resistance, and moved to the downside. So getting to and through the 38.2 would have traders looking toward this area, 50% retracement following that. So, and that's the path for the euro versus US dollar. If we do find sellers against a 200-hour moving average, and we did right here, recall, after just a little tiny break, that's what we're seeing right now. We could see a rotation back down as the market plays in between the 200-hour moving average above and the 100-hour moving average below. So that's a look at the euro versus US dollar. Let's take a look at the dollar versus yen next. And on the hourly chart, we are seeing a rotation to the upside and trading here again today. And that price is moving closer and closer to the converged 100 and 200-hour moving averages. Those levels come in at 137.14. Let's take a look at the daily chart. Here's where that is, 137.16-ish type level. We did move above the 38.2% retracement of this long-term move to the downside. This is from the October high of 2022, the low that we saw in January. The 38.2 comes in at 136.65, and we're currently trading just above that level at 136.68. It is not often that we get the 200 and 100-day moving averages converging, and that is what we're seeing here in this chart right here. So getting up to that level is going to be a tough nut to crack. I would expect that sellers lean against that level on a first test, and today we are seeing a bit of early sellers against that level. It's still 16 plus 11, 37 pips away from it from the high price in trading here today, but you can see how we're getting closer and closer to that level. What would hurt the bias here in this pair? Well, if we were to, let's say, move below the high price that we saw in trading yesterday near the 136.54 level, and then start to move back toward this trend line. This trend line goes back in time to here, here, here. We moved above it here, but failed, and then reestablished the level right here. It was in trading last week where the price moved above that level and then came down to test it in trading yesterday and early today. So moving back below that trend line, which if I were to put a horizontal here comes in around the 136.16, would take some of the bull away from the move to the upside. But right now, the buyers still remain in control. Watch 136.54, watch 136.16. Breaks below those levels would lead to further selling. Let's take a look at the sterling versus US dollar next. And if we take a look at the hourly chart for that currency pair, this is we are moving above a topside trend line here, connecting the highs through here from early February to the high from February, looks like 14th, so mid-February. And we're also breaking above the 38.2% retracement of this move down from the high price going all the way back to January 20th to our low price that we saw on February 15th. That comes in at 121.17. So watch these areas right through here for supportive. If the price can stay above those levels, the bias remains to the upside. We'd have traders looking toward our high price from last week, which came in around the 121.46 level, and above that we'd look toward the 50% retracement of the same move to the downside, 121.81 area. So again, watch this area right through here where the broken trend line and 38.2% retracement comes into play. Move below those levels and could see some further rotation to the downside in the sterling versus US dollar. So there you have a look at some of the major currency pairs. My name is Greg Michaelowski. Good fortune with your trading. Bye-bye.